Ticker symbol SCHY, or the Schwab International Dividend Equity ETF, has recently came across my radar multiple times and seems like an ETF that could potentially be a great buying opportunity for a long-term dividend growth investor like myself. Now in this video, we're going to dig deep into the Schwab International Dividend Equity ETF, explain exactly how it works, what it has to offer, and throughout this video, we're going to figure out if or if not this ETF could be a good buying opportunity for long-term investors that love dividends but also growth. Now, if you consider yourself a long-term dividend growth investor, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So right here on the Schwab Asset Management website, it says Schwab International Dividend Equity ETF, and once again, ticker symbol SCHY. Now the first thing that sticks out to me is that SCHY does have a pretty high expense ratio compared to something like that of SCHD or even VIG, but keep in mind this is an international dividend equity ETF, so it is not only going to have a bit of a different strategy compared to some of the others that I mentioned, but also it's going to have a lot of different holdings. But with a 0.14% expense ratio, it's not all that expensive, but again, still something to keep in mind. Now it says right here, the objective of SCHY is the fund's goal is to track as closely as possible before fees and expenses the total return of an index composed of high dividend yielding stocks issued by companies outside of the US. Now, over the last few years, a lot of big funds have been investing heavily in emerging markets because although there is, of course, a ton of opportunity to make money by investing into companies and ETFs within the United States, there's a big world out there and there's a lot of potential to make some money. Now, the highlights are pretty straightforward. It says low-cost fund offering potential tax efficiency, which is great. The fund can serve as part or core complement in a dividend portfolio, tracks an index focused on quality and sustainability of dividends by screening non-US companies based on 4 dividend quality attributes. And if you know anything about Charles Schwab ETFs, they normally have a very robust screening process. Then lastly, it says invest in non-US high dividend yielding stocks with a record of paying dividends for at least 10 consecutive years, financial strength, and screened for lower volatility. So those are all pretty much things that I love as a long-term dividend growth investor. I, of course, normally look at a stock or ETF's long-term dividend payout history and see if a stock or ETF has or has not been maybe paying dividends for the past, say, 5, 10, 15, 20 plus years. That's definitely one of the metrics that I use in my investing, and I think is a very important one. Also, financial strength goes without saying that that's important. And then lastly, lower volatility. Now, some of you guys watching this video might be interested in buying into different stocks or ETFs that have higher volatility, maybe higher upside. But for me, as sort of a slow and steady, risk-averse, long-term dividend growth investor, lower volatility is my friend, and I absolutely love low beta names. Now, looking at SCHY's top holdings as well as all the holdings within this ETF, it looks like as of right now, there's around 131 different holdings. And keep in mind, a lot of us are not going to recognize a lot of these different companies, most likely. At least I'm speaking for myself because this is an international ETF. But some of the top holdings, which make up around 4.5% to maybe around 4% of this entire ETF, are things like Nintendo, which makes up around 4.5%. We got West Farmers Limited. We got ticker symbol GSX. I don't know how to say this name. We have ticker symbol Rio. Of course, we've heard of Rio. Then a little bit further down the list, we have some more familiar names like Toronto Dominion, which is great, Unilever, of course, and even things like Bank of Nova Scotia, which is a dividend growth beast, and so on and so forth throughout this list. If a stock did make it in this list of around 131 different stocks within this ETF, it did get passed through multiple different screenings, which means that, at least for the most part, it should be at least pretty decent. Not to mention, with around 131 different holdings, this is pretty diversified, so if any of these different companies, if any of these different individual stocks have, say, a bad quarter or a bad year, the rest of the ETF should hopefully pick up the slack. Which brings me into my next segment. I want to look through the performance of SCHY so far. Now, first off, looking at SCHY as it's trading currently, it is trading at around $24.40 per share. Now, this is towards the higher end of the last 52 weeks, and it's up around 1.4% over the last year, so basically flat over the last 365 days. Now, on the max time frame, looking at SCHY's performance, the ETF is down around 5%, and this ETF became a thing back around May 2021. So overall, as far as price return goes, this ETF has not performed all that well, and this could of course be because multiple different reasons, but we can't judge a book by its cover because something like SCHD, for example, which is my favorite long-term dividend growth ETF, over the last few years has not performed all that well either, but longer term, zooming out on SCHD, for example, it has had quite a run. So just because SCHY hasn't performed all that well over the last 3 or so years, it doesn't mean this ETF is necessarily worth giving up on yet. Now, looking a little bit deeper into SCHY and looking at the dividend yield, the dividend growth, etc. And side note, this ETF has not been around all that long, so this data is going to only give us a small picture, which of course, me being sort of a risk-averse investor, I'm not a big fan of. I like seeing data over multiple years. The longer the better, really, because it paints you a picture of what happened in history, which of course does not mean is going to happen in the future, but again, it gives you an idea of things. Now, the trailing 12-month dividend yield for SCHY is actually pretty good at 4.02% trailing 12-month, which is higher than that of like VOO, SCHD, and a lot of other high-quality ETFs. Now, the dividend growth rate over the last trailing 12 months is massive. And again, this ETF has only been around for a few years, so you're not really going to get a good idea of what the dividend growth rate is going to be long-term, of course, because we just don't have the data yet. But looking at every dividend paid out so far, which on this ETF, it pays out a dividend semi-annually. So for income-focused cash flow style investors that want to have income coming in every month, this most likely is not going to be the ETF for you. But if you look at the dividends paid so far, the first dividend paid back in June of 2021, it was 5 cents. The next dividend paid was 38 cents. So it does look like SCHY sort of pays a big dividend once a year and pays sort of a smaller dividend once a year. But overall, the dividends have been getting larger and larger, with the last dividend being 69 cents, which was paid last December. Now, again, for me specifically to want to invest any significant amount of money into something like SCHY, at this point, there's just not that much data to go off of. I do think this ETF sounds like it has a pretty good methodology, and I do think some of the top holdings in this ETF look pretty favorable. But that being said, even looking at the holding breakdown, meaning that most of this ETF is focused in things like communication, financials, basic materials, and the reality that this ETF has a tiny bit of technology, which means this ETF is most likely going to be low beta, low volatility. But for me, along with a lot of you guys out there watching this video, we want to have a little bit more technology exposure in our ETFs that we're buying into, because if we do have a long time frame ahead of us, we want some exposure to some potential upside. So because SCHY is relatively new, we don't have that much historical data to go off of, and the fact that this ETF has performed pretty poorly over the past few years, and on top of that, the fact that a lot of these companies, although they might have something to offer, I personally would rather just buy into a small portion of maybe some of my favorites out of the top 10 or top 20 holdings in SCHY. I don't think that I personally would necessarily buy into this ETF, at least not as of right now. Now, lastly, just to be fair, I wanted to see how much an investor would have returned if they bought into SCHY when the ETF started, more or less, with a $10,000 purchase and even reinvested the dividends along the way. So if an investor bought SCHY back in the day for around $25 per share, which again now is trading in like the mid 24s, they would have returned a total return of 6.43%. or an average annual total return of 2.3%. Now again, like I said earlier, we just don't have all that much data to go off of when it comes to SCHY because again, it's relatively new. But at this point, at least for me personally, this does not seem like an ETF that I would invest into. Although I don't think there's anything wrong with having some exposure in the international markets. But as of right now, I think I'm going to sit out when it comes to SCHY. But now I'm curious to hear from you guys down below when it comes to investing into companies, into stocks, or even ETFs outside the United States. Do you currently have any big holdings outside the USA? And if so, drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.